Hello and welcome to this session. This is Farhat, in which we would look at sampling and non-sampling risk. We also look at type 1 and type 2 errors, which are alpha and beta. Now the first question is this: why do we need to learn about sampling when it comes to auditing? So why do we sample in the first place? Well, let's think of the end product of an audit. What's the end product of an audit? It's a report. Remember the audit report. Do you guys remember what we have in this audit report? We say that we believe the financial statements are fairly stated, and we spell out how we came out to that conclusion. And what did we do? We used reasonable assurance and we sampled. So what did we do? We provided confidence that the financial statements are fairly presented without reviewing 100% of the transaction. Hold on a second. So you're telling me they're fairly stated, but you cannot say 100% for sure. I can't. I can only provide you reasonable assurance. Why? Because I sample. So why do you sample? Well, high transaction volume. For a sample company, if we're looking at the publicly traded companies, they could have millions of transactions, buying, selling, payroll, so on and so forth. You cannot audit every transaction, so you have to sample. But at the same time, you have to deliver some type of an assurance. Absolute assurance is not possible because you cannot audit 100%. Reasonable assurance is possible. Now let me tell you something, since we're talking about auditing and absolute assurance. Even if you audit 100% of a company's transaction, you could still not provide absolute assurance. I'll tell you, when I was in practice, I used to audit not-for-profit small organization, and I used to audit them 100%. Although you audited 100%, you could still have some other issues where you sampled everything, but you made a mistake. You looked at everything, but you did not look properly. So it's not about you sample or you did not sample. It's about you cannot provide absolute assurance because mistakes could happen. Therefore, in an audit, we could only provide reasonable assurance. And I hope we know this already. And why do we do that? Why do we sample? Well, high volume of transaction. Therefore, we have to make choices. We have to balance efficiency with audit quality. So we have to get the evidence. We have to have good evidence, but we are working within a budget. We have time constraint. We have resource constraint. We have a limited budget. Therefore, we have to work with that. Therefore, we have to take a cost-effective approach to auditing. It doesn't mean we should cut corners or not do certain things because of cost, but we have to be effective. So this would allow us to do what? To draw a general conclusion about the entire sets of data only by sampling. And this is what we will discuss in this session, diving specifically about something we call sampling risk, non-sampling risk, type 1 and type 2 errors. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Our audit course is best for online students and students who are struggling in their audit courses. We cover the essentials from audit reports, internal control, ethics, evidence, sampling, planning and materiality, assurance and non-assurance services, and of course, the accounting cycles. Our comprehensive course includes lectures, multiple choice, true-false questions. Go ahead and start your free trial today. We are here to help. Your success starts here.
We need to first determine where do we sample. So in an audit, where do we have to use sampling? We use sampling in two different places. The first one is when we test the control, and this is called attribute sampling. What's attribute sampling? Attribute sampling, checking to see if controls are working as intended to either rely or not rely on the control. Like what? Well, we might have a policy that every check or every invoice over $10,000 would need the manager's approval. So we would look at invoices above $10,000 and we'll determine whether we have the manager's approval. If the answer is yes, the attribute is there. If the answer is no, then it failed. We have a deviation. We did not follow the control. So this is an example of what we called attribute sampling. Attribute sampling is related to the test of control to determine whether a control is working or not. The key concept here is what? And we talked about control risk. We're going to talk about it later on. We're going to set what we called a tolerable deviation rate. What is that? This is how much we can deviate and still accept the control as working. What does that mean? If we're looking at the $10,000 invoices, we would say we can tolerate up to 5% of the time that the approval is not there and still believe we can rely on the control. So our tolerable deviation rate is 5%. So if we selected 100 invoices that are over 10,000 and 4% of them are missing, we could still say, well, we are below our tolerable deviation rate. So the control can fail up to 5% before reliance is lost. So at 4%, we could still rely. Now, don't worry, we're going to dissect this 4 and 5% later on. All what I'm introducing here is where do we use sampling. Why is this important, sampling in control? Because remember the audit risk model, inherent risk times control risk times detection risk. Remember, inherent risk and control risk work together and they are inversely related to the detection risk. Remember, IR times CR is called the RMM, risk of material misstatement, and they are inversely related to detection risk. And this is basically, hopefully this should be all a review. And this is a review as well here. The point is we sample control to determine this control risk. If we found fewer errors, it means control risk is low. It means we have to do less work, less substantive testing because we can rely on it. Therefore, we can accept a higher detection risk. If we find many errors in the control, we say that the control risk is high. It means we have to do more work, more substantive testing. Therefore, we can tolerate a lower detection risk. That means we have to do more work. So this is when it comes to test of control. So this is one area where auditor use sampling. The other area is substantive testing, which is what? Which is also called variable testing, or the testing the dollar amount. Remember, attribute testing is whether the control is working or not. Substantive testing is you're looking at the actual amount, at the dollar amount in the financial statement to determine whether the dollar amount is fairly stated. It's correct in the financial statement. Example would be confirming balances in the account receivable to determine whether a balance of $500,000 in account receivable is fairly stated or not. So to determine whether the balance is fairly stated, $500,000. This is when it comes to substantive testing. So two places, test of control, which is attribute testing, and substantive testing, which is called variable sampling. Don't worry, we're going to have separate recording for each one of those. I'm introducing you here to where sampling is used. Now we need to be familiar with something called sampling risk. So first we need to explain what's sampling risk and obviously what's a non-sampling risk. So what is a sampling risk? Well, I'm going to give you an example. When I teach in a large classroom, and this is not my classroom, this is not me, but the point is, I'm just giving you the picture here. Let's assume I'm teaching financial accounting. And who takes financial accounting, introductory or principles of accounting? Accounting students take it. Management, marketing, finance, a business major in general take this accounting course, financial accounting. Now, if I am the instructor and I want to take a sample in my class to determine how many students in the business school are studying accounting, what can I do? I can, go ahead and ask the first row of students, 10 students sits in the first row, and I find out of the 10 students, 4 are accounting major. So what I did is I sampled. I only selected 10. Let's assume I have 100 students in total, and I selected 10, and I happen to select the people that are sitting up front. And I would say, well, 4 out of 10 is 40%. And I would say if we have 1,000 students in the business school, 40%, 400 are accounting majors. Most likely that's not even closely true. But I'm here to make the point. So what did I do? I selected a sample. But guess what? The people that sit in the front are most likely to be accounting students. Why? Because they are more likely to be motivated. They want to sit up front. They want to pay attention because they are accounting students. If I sampled from the last row, maybe I would have 1 or 0 students are accounting students. Because, accounting students are the most serious, right? I'm biased. Of course I am. Right? So I would say if I selected the last row, I would say we have no students in the business school, or there is 1 out of 10 or 10%. So the point I'm trying to make here about sampling risk is the chance that a sample does not represent the population, leading to the wrong conclusion. When I selected the first row, I made a mistake. I was biased. I selected the first row. And the first row, there's a good chance that accounting students are there. Therefore, first of all, my sample size could be too small. Maybe I should have selected out of 100, maybe I should have selected 30. And maybe I should select 30 from different areas in the room, not from the front, not from the back. Maybe I would just go every 5 students, I would select 1 student just to make it random. So reducing sampling risk. So how can I reduce my sampling risk? I increase the size. So rather than select 10, I would select 30 students out of 100. That's going to improve my accuracy, reduce my sampling risk because it's a better representation, and use random or stratified selection method, which we'll talk about stratified later on, but simply put random. Don't choose from the first row, the second row. Every 5 students, ask the 5th student, what's your major? Then another 5, tell me what's your major. That's random. So random selection also reduces the bias. In the real world, for example, if you test invoices from one region in the company, you may represent the company-wide accuracy because in one region they might be very accurate in their invoices and other may not. So this is called sampling risk, is where you selected the wrong sample. Just the sample is not representative of what you want. Then we have non-sampling risk. Non-sampling risk has nothing to do with sampling. It's a non-sampling. So those are errors not caused by the sample itself. It's by human error or audit approach. I carried the wrong audit approach. I did not carry the audit in the proper fashion. It's my problem. I selected the right sample, but the audit is not correct. For example, I selected the right sample, but I missed an error. I missed an exception. I used the wrong audit procedure. For example, I could have used tracing versus vouching or vouching versus tracing. I have the right sample, but I used the wrong audit procedure. I misrepresented the information because I'm tired, I'm distracted. That has nothing to do with the sample, just simply the person made an error. So how could we reduce non-sampling risk? Well, proper training. Train the employees with the proper, when do we use vouching, when do we use tracing. Let someone review the work, strong quality control, supervise the process, adequate supervision. So all of those would reduce non-sampling risk that the sample is correct, but the risk is coming from somewhere else. From where? Either the procedure is incorrect or the person carrying the procedure made some sort of a mistake in interpreting the information. So that's why even if you sample 100%, if you remember we talked about sampling 100%, you could still have non-sampling risk because you looked at everything, but you misinterpret certain information, you used the wrong procedure, you missed certain things. Also, you looked at everything, but you missed certain things, which it could happen. Now let's talk about type 1 and type 2 errors in auditing. Type 1 is called alpha risk. And what's type 1 and type 2? Let's start with the definition. Type 1 is what? Is concluding that a control is ineffective or a balance is misstated. Something is wrong when it's actually fine. Let me give you an analogy. It's going to be a little bit harsh, but it makes the point. You went to the doctor, and the doctor suspected you might have cancer. You'll be like, wow, okay, this is serious. Let's check everything. So the conclusion here is you have cancer, but in actuality, you are fine. So what happened when that's the case? You're going to do more testing. So what's going to happen? In an audit, you will do more work. You will become inefficient. You will do more work when type 1 errors exist. For example, if there is a sample that shows 8% control failure, so you selected a sample and it shows 8%, you can tolerate up to 6%, but it shows 8. Hold on a second. I'm above my tolerance. I should not rely. But in reality, the population is only 3% deviation rate. So why did you find 8%? You selected the wrong sample. So what would happen under those circumstances? So in the real world, if this happens, usually if the company is confident that their control is working, they will ask the auditor, go back and look, choose another sample. Because if they really believe they have a good control, that's what they would do. So under those circumstances, let's assume we said we cannot rely on the control and we accepted it's not reliable because it's 8%. What's going to end up happening? We're going to do more work than necessary. We're going to do more substantive testing. So this is type 1 error. So type 1 error will do more work that's not necessary, but nothing is wrong. Just we thought we could not rely, but in reality, we could have relied. Type 1 error. Not a big deal in relative to type 2 or beta risk. Type 2. Type 1 is alpha. Beta is different. This is when you conclude that the control or the balance is correct or the control is effective when it's actually not effective and the balance is not correct. If we go back to our analogy, you went to the doctor and the doctor says all is good, but in actuality, you have cancer. So this is why, what's going to happen now? You're not going to test anymore. Why? Because you think you are in good shape. Well, in reality, you should have do a little bit more testing. This is dangerous. Type 2 is dangerous because you could have a material misstatement that might go undetected. So the sample size shows 2% error. You can tolerate up to 6, and you would say, good. I only found 2. I could tolerate up to 6, but in reality, the actual error is 20%. Why? Because you chose the wrong sample. The sample is showing you 2. You said I can tolerate 6, but in actuality, I'm in trouble because the actual rate is 20. So the auditor here failed to detect a major control problem or a major balance issue. So let's take a look at a summary of everything that we talked about for test of control. So how do we have test 1, type 1 and type 2 error? So let's assume in reality the control is effective and your sample support it's effective. What would you conclude? You would rely on the control. The outcome is correct. There's no error. So when does type 2.1 exist? In reality, the control is effective. The sample result, say it's not effective, does not support its effectiveness. What do? You don't rely on the control. You do extra work. You are inefficient. So the outcome is inefficient, which is, that's fine. We spent more time. This is considered type 1. The third scenario is internal control in reality is ineffective. The sample result shows it's effective. You rely as an auditor. You do less work. The outcome is ineffective. You're missing major problem. You have a type 2 errors. The fourth scenario, the internal control is ineffective and the sample result shows it's ineffective. You don't rely as an auditor. You made the right outcome. There is no error. This is for test of control. We can do the same thing for the substantive testing, but the terminology is different. In reality, the account is fairly stated. The sample supports that. You accept the balance. The outcome is correct. There is no error. In reality, the balance is fairly stated. This is the second scenario. Your sample result does not support, but it's fairly stated, but the result says it's not fairly stated. You would reject, and you're going to do extra work because now you are afraid that the account is not fairly stated, but eventually you will find out it should be fairly stated. You are inefficient. You committed a type 1 error. The third scenario, the balance is actually misstated. The sample result shows that no, it's fairly stated because you selected the wrong sample. You would accept the balance. You are ineffective because the balance is misstated, but you think it's fairly stated. You committed type 2 or beta error. And the third one, it's misstated. Fourth one, it's misstated. The sample result does not support. You reject. You made the correct rejection. Just real quick, key takeaway for the CPA exam. Sampling risk is about the representation of the sample. Non-sampling risk is about the human mistakes. So the sampling risk is the sample itself. It has to do with the sample. And we're going to talk about sampling later on. Non-sampling risk is you made some sort of a mistake that's not related to the sample. Type 1 error, you are inefficient. You did unnecessary extra work. Type 2, you missed a serious problem. It's more dangerous. So how do you do a better work? Proper sample design, selection, and review to reduce both risk. And we'll talk about those later on. Let's take a look at a multiple choice from farhatlectures.com. All the following are examples of non-sampling risk. So those are non-sampling risk. We have 3 non-sampling and 1 is a yes. 1 is a sampling. So we need to figure out which one is the sampling risk. And by the way, if you don't know what a non-sampling risk is, on my website you could say, explain the topic for me. If you just want to, you know what, I want to know what non-sampling risk. Or you can, after you explain the topic, you can look at the, select the answer, or you could select the answer and check the work. So let's go through the answer choices and see which one is a sampling risk. Failure to recognize exceptions. Failure to recognize exception has nothing to do with the sampling. You failed to recognize there's a mistake. That's a non-sampling. I'm looking for the sampling, so this one is out. Ineffective audit procedure. I used the wrong audit procedure. Well, the sampling is correct, but I made the mistake of choosing the wrong tools. That has nothing to do with sampling. That's non-sampling. Inadequate sample size. Look, just telling you right here. You selected the wrong sample size. So this is the problem. It's a sampling problem. So I'm going to go with that one. Misinterpretation of the audit evidence. I misinterpreted the audit evidence. I have the right sampling. My mistake was I'm tired. I did not understand the sampling properly. This is a non-sampling, out. So I would select this answer. I will check my answer choice. If I don't like my explanation, I can go back and look at the explanation. And on Farhat Lectures, you could create a similar MCQ to practice again. What should you do now? farhatlectures.com to look at additional resources, especially questions, AI assisted questions. That's going to help you refresh the topic, explain correct and incorrect answer, and create a similar MCQ. Whether you are a student or a CPA exam candidate, the best investment you can make is invest in yourself. Good luck, study hard, and of course, stay safe.